Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 27th of August. Starting off with Amigo Holdings, where the battle continues between the Bulls and the Bears. We're in this basic range between 11 pence and let's say up to 14.5. So the volatility tightening up there and basically looking for a new move to the upside on the basis that the RSI has been consolidating above neutral 50, currently at 56. So let's see if the technicals correctly predict the upside here, or if there is an upside. Obviously, resistance there up to 20 pence, but probably the initial target there, the top of the gap down earlier this week at 16 pence, and obviously the stop loss just below 11 pence. Fun and games with Catenae this morning, a TV appearance, so enlivening the price action. But we're still stuck in this descending channel there from the end of July. Floor of the channel heading towards the 2.6, 2.7 area, an uptrend line, then also from April up towards that area. Resistance at the 50-day line at the top of the channel at 4 pence. So the easiest strategy here at the moment is to wait for an end-of-day close above 4 pence. If you are a bull of the stock, or obviously look to that support zone at 2.7, 2.8, etc. On to a stock that I've covered quite recently, Dukemount as a potential turnaround situation. Here we've got a rising trend channel based at the 50-day moving average, and 200-day moving average is actually currently both touching at 0.7 pence. While we're above that, looking for the top of the wide trend channel from back in October at 1.4, 1.5 pence, obviously retesting that May peak. If you're cautious on the shares, and if the shares allow you an end-of-day close above the August resistance to date, 0.93 pence on a mid basis would be a decent signal for the stock. But ideally, there's no sustained price action back below 0.8 pence now, with the 0.7 pence area the hard stop loss at the moment. Horizonte is next, as nickel stocks have bounced back on Elon Musk's call to producers to rev up their output, and so we've seen a situation where there's an imminent breakout here with shares of Horizonte, 7 pence, the high of back in August this time last year. So an end of day close above that could be enough to take the shares towards the top of the rising trend channel from last year at 12 pence. Stop loss on the buy argument at the moment, back at 5.4 pence, the initial August peak for the shares. Going on to another stock which looks like it's ready to push to the upside, Kodal Minerals, bumping along the bottom and consolidating for the last couple of months now. But it looks as though we're just breaking a line of resistance from the end of June with probably a 0.05 end of day close or above. Also, that would be above the 50-day moving average, the blue line there. So 0.05 and above, we could start to retest or retrace the best levels of June towards 0.12 pence. The trend channel here looks as though it's like that. So from January, and that would even get us up to 0.13 if we could hit the top of that. But end of day or a weekly close, 0.05 plus could be enough to get Kodal on the move. Next up is a stock which I don't think I've covered before of late anyway, Polo Resources. Here we've got a trend line break, one from June, so looking for basically an end of day close above 1.6 pence, which is where the line is at the moment. If we can get that, then the shares could head up towards the 2.5 pence area, which is the area of the 200-day moving average. If you're more optimistic, the top of that broadening triangle from March at 3 pence would be the 1 to 2 month time frame target. Ideally, there's no break back below 1.5 pence now, 1.4 pence in fact, as that was the previous March low. So we've had a bear trap rebound really from below 1.4 for August to date. Rurelec continues to power ahead, and we've seen that the shares managed to hit the initial target here at the top of that broadening triangle from the beginning of 2019. So that was around the 1.8 pence level. We seem to be motoring now towards the bigger picture target, which is a line of resistance from back in 2015, and that is up to 4.5 pence. 4.5 pence valid while we hold above that spike from June 2017 at 2.68 pence. So above 2.68 pence, still a chance of 4.5 pence for Rurelec over the next few weeks, or the way things are going the next few days. On to Scancell, the next contender, which had a decent breakout, I believe, last month through 5.5 pence, breaking that falling wedge, falling triangle at 5.5 pence. Nice gap higher today. Probably the view at this stage is that while we remain above the floor of the gap at 7.5 pence, we could still see further upside, possibly as high as that December resistance line projection, currently heading towards 12 pence, and that can be seen as soon as the end of next month. A couple of stocks to go now, relatively obscure ones. First one is STM Group, where we've broken through 35 pence, and above that, looking for a top of January trend channel target as high as 50 pence plus. Stop loss on that probably at the moment, end of day close, back below 30 pence or even 31 pence. That initial August peak should be enough on a mid-close basis. And then finishing off with a new stock for the Bulletin Board Heroes, Total Produce, breaking the 50-day and 200-day moving averages today, above the 50-day line at 99 pence and that broken January resistance line, looking for the top of that trend channel from February as high as £1.40. Only back below really 92, 93 pence, which is the floor of that channel from March, really killing the bull argument or the breakout argument at the moment. That's it for me today. More updates tomorrow.